Marcus Veremis, thanks very much for joining me.
Thank you, Richard.
So given the flight to quality assets and a massive government stimulus we've seen during this crisis, we might have expected cryptocurrency to have performed better this year. So what's happened?
Yeah, so first of all, let me start by saying that as of today, Bitcoin is up around 7.5% in USD terms for the year, for 2020. The S&P 500 is down about 10%, and gold is up around 13%. So Bitcoin, for the year as a whole, of course, it's been volatile throughout, but for the year as a whole, as of now, has performed quite decently, I would say. The second thing I would say is that I would really not call Bitcoin a quality asset at this stage. I would call it not even a hedging asset. I would call it a potential hedging asset. And I'll elaborate on what I mean. It is still highly speculative with restricted liquidity versus mature assets. Its role is to potentially perform a function similar to that of gold without some of the shortcomings of gold that we can talk about. But in short, it's an asset with a limited, in this case, with a fixed supply. And the role it could perform would be that of protecting against inflation, currency devaluation, but also stress in the traditional financial system since it operates outside of it. In general, it's true that you'd expect it to perform well in times of turmoil, as it did in the past in the case of Cyprus, when the deposits were taken and so on. But I would call it an option to become a hedging asset at this stage of its life cycle. It's still very early in its adoption and very highly volatile.
So interesting. So it's not yet in that class of quality assets, and that's reflected in the low usage levels. So when would you expect it to become more mainstream, and what might be the triggers for that happening?
Yeah, that's a great question, and that goes to crypto more generally speaking, because it's not just Bitcoin. I want to say first of all that Bitcoin is just one crypto asset. There are multiple types of crypto assets that perform different functions and are being developed currently, and then there's also blockchain technology. But I would say that crypto. Let's take Bitcoin, since your question is related to Bitcoin. It has limited usage, but it's grown a lot. So if you look 10 years back, I've been reading a book called Digital Gold, which talks about the history of Bitcoin. And 10 years ago, it was a few people literally talking about it in a cryptography mailing list. It's gone to being an $100+ billion cap at this point, but it's still held by very few people. What do I mean by that? Very few people. Only about 800,000 people globally hold 10 Bitcoin or more. So $7,500 worth of Bitcoin or more. And maybe 20, 30 million hold Bitcoin, but it's in very tiny, small amounts. So I wouldn't call it mainstream usage yet, but it's definitely developed quite a lot. And if it does start capturing more users, the whole idea behind it is that it could rise multiples from where it is today, given its limited supply and given the inflow of capital coming in, especially institutional investors. But I would say for crypto in general, you can parallel crypto to the protocols, the original protocols of the internet. It is currently at the infrastructure stage. That's something to be aware of, not at the use cases stage. Mm-hmm. In the same way that the internet protocols performed and a decentralized exchange of information function, crypto is promising to perform a decentralized exchange of value function, but it's being currently developed as we speak. So we are at the infrastructure stage, not the usage stage. I expect usage to be, 2+ years down the road, like mainstream usage or more is my 2 cents on this here.
Okay. So I guess related to that is it something that a mainstream investor should allocate to now as part of their portfolio by way of kind of risk reward profile, or is that still a few years off?
That's a very good question. And I would say that at this stage, only if an investor takes a substantial amount of time understanding the technology, understanding the crypto space, the players, the entrepreneurs around the space, and being very selective about where they invest. I would also say that very, very small amounts of capital would be warranted at this stage because it really is very early. I would call it very early stage venture capital as an asset class, kind of like what venture capital was before the pre-web days, before Netscape, before real usage started. It's still at the infrastructure stage, as I said. So the risks are very, very high. Now, if somebody invests, they should be willing to lose their entire amount potentially. I mean, that risk still exists. So I would view it more like as an option. So you pay that premium, you might lose it. But if it does work for you, it could be multiples of your capital. So I would put a small amount at this point, very small.
Okay, excellent. Marcus Veremis, thanks very much for your opinions.
Thank you, Richard. Thank you.